Hi, everyone, and welcome to the May installment of Monthly Market Report with Jim Roppel. It's Alissa Coram here, and it's great to see you, Jim, creator of the Roppel Report. How's it going?
Great to see you, Allie. I'm great. Summertime, great market, hanging out.
Yeah, what more could we ask for? All right, we've got a lot to get to and a lot to cover over this next hour. We're going to get Jim's high-level thoughts on the market action for May and a look forward, what we should be doing in terms of positioning, stocks he's watching, earnings season. That was a big part of the May action. We're also going to talk about crypto, of course, and shifts that we're seeing underneath the surface in terms of where the leadership lies. So we'll get to all that. But first, Jim, I want to get your overall thoughts on the performance for May. I'm going to go to the NASDAQ and the monthly chart here. So it turned out to be a pretty good month. So we had April, NASDAQ down 4.4%, and then May, a really nice recovery, up 6.9%.
I think you said it all. I mean, it was a month of recovery, and I think people really became very short-term focused. And I think people don't understand history, that you should expect 3, 4, 8% pullbacks every single year in bull markets, and maybe even a 10%. So, we broke the 50, people flipped out. People were like, I'm going to lose all that money I made. That's November. I haven't made money for 2 years. We're in a horrible bear market and I don't want to give it back. And they all wet their pants. And all of a sudden the market caught support and it's just traversed calmly, nicely right back up.
Yeah. And so in terms of what lessons we can learn for if this happens again, you said this happens multiple times a year in a healthy bull market. So it seems like what you like to do is hedge your individual positions to try to get those longer moves in those true market leaders. So you can talk a little bit about that, but really, since this was a recovery month, what were your signals to start pressing the gas hard? I assume you were getting aggressive, but what were those signals that you were looking at?
Well, first of all, I want to address this really quick because I often use the NASDAQ itself to hedge my overall portfolio. And that's become a big problem because the market has thinned out because we lost a lot of leaders in the earnings season. So, but the NASDAQ remains incredibly strong. So if you're shorting the index to hedge your portfolio,
Right.
you probably got double hammered. So in this environment, you have to note how strong the index is and hedge your individual names, which I know a lot of people use the NASDAQ as a practice. Don't do that right now. Mm-hmm. On the other side, the market regains the 50-day. That is a big, big green flag. I think kind of one of the most critical things, we had 2 faux follow-through days, but I think the breakout in Nvidia is so critical. My old boss 30 years ago used to say, and he was like 80 then, literally, he'd be like, well, as General Motors goes, so goes the general market. And you just substitute Nvidia.
Yeah.
And so that was kind of like a breakout for the most important sector of the market and the underpinnings, the rails of the digital world we live in. And so when that went, and it went violently, and they had an expectation breaker, there was no expectations of any earnings from Blackwell. And in the post-earnings call, the stock was flat. And then Jensen Yang said, we're going to have revenue this year from Blackwell. And it took off. And it's been totally in gear since then. And I think like the general market, most days that Nvidia breaks, it ends up closing strong. Expectation breaker, the market like last Friday did it. I want to answer your question because I went tangential off the rails. There was a lot of double bottoms that gave people opportunities to get into those leaders that, you should have your watch list, your wish list. Mm-hmm. No one gets them all. Bill would tell me, I missed it. It's part of the game. But when you get a pullback of 8%, gives you the second shot. A lot of double bottoms. And there we go.
Yeah. And I do need to disclose that I have a position in Nvidia. Sounds like, Jim, you have your position in Nvidia still. And you've talked before about how there are really just a handful of stocks that can make your year or even your career. And what's so interesting about Nvidia is it has all of the qualities, right, that we're looking for in that true market leader. And it's been performing. I think perhaps maybe one of the only knocks against it is that expectations now are so high and everyone's eyes are on it. But does that mean that it's necessarily over for this, even though there are so many eyes on it? I mean, things are looking pretty good here. Can it last?
It can. It's very odd, but I don't consider it to be, okay, TMLs, true market leaders, are elite rare names. There's probably 5 to 10 in every bull cycle, but this is a multi-generational quality TML. It really, really smacks of Cisco systems. And I think Cisco had 14 bases over 10 years. And the only difference is, see, I was in Cisco up to my eyeballs, because I'm a dinosaur. But I think Nvidia, okay, so let's go backwards. Cisco linked everyone's computer together. Computers were standalone machines. They did not communicate with the other machines or the internet. And Cisco changed all that. The earnings growth, okay, so Cisco had earnings growth and liquidity, the magic elixir. The difference is Nvidia's earnings, I haven't checked it, but I'm going to go down in my vault and get the 15, 20-year-old chart book. I'm pretty sure that there's never been a stock in history that has had this much liquidity with this high of earnings growth. So this thing absolutely is, I think this generation of investors is like, oh, the super stock we all know is Tesla. It had 2 or 3 climax runs. I think Nvidia is better. I think it's more important for society. I think it will become the largest market cap in the world. And yeah, okay. And I saw Bill in Chicago when he didn't even charge at the Board of Trade. And he's like, Cisco's topped. It's absolutely topped. 3 months later, he was right back in it. It was like the Energizer bunny of rebase and go. And if you look at and people are like, oh, you can't compare Nvidia to Cisco because Nvidia's already been going for a decade. This thing is, Cisco went purely off of connecting computers together. Nvidia ran for the prior 8, 10 years on gaming, automotive. It only became an AI play about 2 years ago. So we have to start counting. I'm counting from 2 years ago. So if we have another 8, how long is it going to take to implement and build out the infrastructure for AI?
Exactly.
The golden goose is going to take 10 years.
Wow. So in terms of your plan for Nvidia then, and there are calls for a top here, what are your sell signals? Because it sounds like you were holding through the last base, using that hedging strategy for the individual position that you said. So it sounds like unless we have a multi-week bad break below the 10-week, what is it that you're looking for in terms of a top? Because I know you were telling me pre-show that this is one that you think could, and emphasis on could, play out over a long period of time versus being a violent, quick top.
So Webby was on the Roppel Report a week or 2 ago, and either I asked him or I think I asked him, I said, hey, do you think this is going to end in a classic climax top? And he said no. And I tend to agree with him. I think we could have a few mini climax action periods. We could have several over the next 5 years or so. But I think the magnitude, the large market cap is so enormous that again, I am so guessing that it's going to be a giant rounded top that could take a year or 2 years. I don't think everyone likes to refer to Qualcomm for the most obvious climax top in decades, but the market cap is so much bigger with Nvidia. So anyway, I think we'll have climactic action many times. And if you're a shorter term trader paring back in excess, and the biggest trade I ever had in my life, I traded around the core of a 750,000 share position 30 times.
Wow. So that's just a little active there.
Well, that was over 18 months.
Yeah.
And I didn't even
So
realize.
speaking of this move, I guess if you're counting, from the bottom week of the 2022 bear, it's been about 18 months.
Okay, right. But if Cisco, when it started, split adjusted, it went from like 6 cents to $85. It's a 42,000% growth. So, I mean, look, Nvidia has been amazing. It's changed people's lives. Literally, people went from first class to private jet with Nvidia. There's no doubt.
Mm-hmm.
But it's not 6 cents to 65 or $85.
Right. We're not there yet. Sounds like you're anticipating a much longer runway. So,
okay, but it could end up being BlackBerry, and someone could usurp them with a better technology like Micron, or I don't know.
Yeah.
There's no threat. No charts are giving me a threat signal at this minute, but I was in BlackBerry up to my eyeballs, and I
Research
watched.
in motion.
Yes. And I'm like,
You
whoa.
could see that movie, by the way. There was a movie about BlackBerry. It's called You need to watch it because it made me think of you. Because
Crackberry.
Yeah.
But it was an absolute game changer. It took people. I'm playing golf with my buddy. I go, what are you doing? He's like, hey, I got this new phone. He goes, I can get all my email on the golf course. And it liberated people to get out. It was an absolute game changer for people, just like these. So anyway, Apple comes along. I'm like, oh, there's room for two massive players. The difference was Apple was 10x better, and people bailed on the BlackBerry, and that's it. BlackBerry's, what is it, below $5 or $10 a share?
I don't even know.
It doesn't matter. It's in the junk heap.
Yeah, here we go. And this isn't even showing. Yeah, here we go. I'm zoomed out on the monthly chart. So yeah, currently trading under $3. But I think, long story short, the moral of the story here is, you're not just going to blindly hold this. You have seen examples of the past where you have to stay open-minded. So we will definitely do that. I don't want this whole thing to be about Nvidia, even though you and I totally could spend multiple hours.
We have 6 other topics.
Yeah, we got a lot to get through. But I think it was an important part of May, right? That earnings report was definitely important for May's action. That was on May 23rd. But I think it's a good jumping off point for a discussion about the rest of earnings season, which a lot of it did unfold in April and May especially, before Nvidia's earnings report hit. So what did earnings season change about the makeup of this bull market in your view?
Well, it thinned it out. We lost an absolute earnings juggernaut group, SaaS, services, software as a service, starting with Workday, NTNX, MDB, ServiceNow, Adobe. These are not just any companies, okay? These are earnings monsters, and the market went frigid on them. And so, the guardrail is the 50-day MA, a bad break, gap down, not much recovery, then breaks 50-day. So when you see that in a massive leader like any of these names, you have to assume the market's soured on the group. So earnings reports forthcoming, you got to be prepared to get hammered, which brings up CrowdStrike tonight. Everybody be very careful. I'm jumping tracks, but so we lost the SaaS group.
Yeah.
Williams-Sonoma was a real expectation breaker, and an upside reversal down, bearish engulfing candle, reversal volume. This is a big issue. And so I'm going to give away the 6th bullet. While technology is killing it, the Mag 7 is expected to spend, get your arms around this, $200 billion of golden goose money in AI in 2 years. So tech is rocking on one side. We have a split tape, while the consumer might be struggling, like redecorating their house with Williams-Sonoma. And think about the man who makes $85,000, $100,000 a year. He wants to take his kids to Outback Steakhouse, and it's $250. He wants to take his kid to the Chicago Cubs game, and a beer's $15. He's got to save for that. Inflation is crushing the consumer while technology's rocking off in the other direction. So we've got this bifurcated market. And Lulu, absolutely obliterated. Celsius was crushed.
Yep.
Lulu was crushed. Celsius was battered hard. What really kind of creeps into the technology area is Dell. Now, that gap down, it did hold at, I think it's holding the 50 at this point, but I consider it a damaged
Yeah, that was a bad break.
Now, if you contrast it with VRT, which is another AI leader, it has had a pullback to the 50, but it's been semi-orderly. It is nothing like Dell. Like VRT in gear and definitely worth hold. For me, it would be a hold. Dell is a sell at market. Those are my opinions. So that's what earnings season brought us.
Yeah. So, the other interesting thing though, Jim, is even if breadth isn't plentiful out there, I mean, I was going through this week's Roppel Report, which appreciate the shout out, by the way. All shucks, didn't need to do that. But I mean, that was a hefty report and you still had a lot of charts in there. So it's not like it's, mag 2 or bust. There are other things out there. You just have to do the homework. And that's what you're so good about. I mean, you are keeping tabs on all the best merchandise out there.
Okay. I want to call on me, teacher. This has been a great market because it's allowed you to really have a diversified fund. Okay. You can have 1 or 2 AI names. You can have the Mac Daddy King, Nvidia. You could have a crypto position which is absolutely, we have got to talk about. It's breaking out right now. You could have a drug name with Eli Lilly. Yep. You could have a restaurant with CAVA. You could have a home builder with Pulte. You could have, look, if you're jammed up in electrical technology right now, you are biting your nails. You're a cowboy on the razor's edge. I am way too old for that crap. I am sleeping so well. I'm just not worried, and just a little bit of crypto quality, not some meme coin, microscopic
Doge.
Whatever. Yeah. Dude, I can't remember a bull market where I had this much ability to spread out amongst many growth sectors. I can't sleep at night because I'm so optimistic about where we probably are going, but I'm not worried about losing. The market never short a dull market. We've gone nowhere for 2-3 months and people are getting late. They're getting where's my money? I want to make money like I did since last November. I don't like 8% pullbacks. Everybody, if you can't sit for 4 beat and raise quarters, it's really hard to change your life. You're going to have to endure base building, quiet periods, but never short a dull market, especially in the summer. Things can change. I mean, dramatically in 3 days. They can also trade up or down. Major breaks in markets can occur over 3 days. They can start to factor and then break just terribly. I'm going to contradict myself. Don't be micro focused on wiggles and jiggles on every day, but be aware of what might be building. So I don't want to act on a micro level, but I do want to keep track of that daily NASDAQ and S&P, but everything's cool. Enjoy the beach, enjoy the summer. As long as your leaders are holding above the guardrail, and we have got to go to crypto.
Yeah. So just real quick, you're focused on weekly charts then to sort of balance out, okay, I'm going to chill. I'm going to focus on the weeklies in addition to, it's not like you're not looking at the dailies of stocks that you're up big on, but is that fair to say?
I used to be 95% daily, but as I've aged, I've turned into my father, and Bill O'Neill would look at Bill, be like, Jim, okay, stop with the dailies. Okay, let's look at these weeklies. I've aged. I've turned into Bill and I've turned into my dad as I've aged. Okay, so I am now far more interested in taking the noise out of the daily and looking at the weekly. Bill would almost, after listening to him, I think people would line up and people would all have their charts. And he literally said to this one guy, he goes, a daily chart. He goes, I'm not even going to look at this. He didn't want to look at the daily, he wanted the weekly.
Yeah.
And Bill's the master. I'm just a knockoff artist. So that's where I'm headed. That was a 5-minute answer to yes.
No,
I
yes.
just said yes.
Well, me too. I don't know with that, if I guess I'm also turning into your dad, but no, I think it's crucial. I mean, I'm not just going to look at a daily chart. I'm constantly going through the weekly charts to get that step back perspective. So,
and what about the monthly? If you want to look
Yeah.
at the Mac Daddy of bases, just pop up GLD. Okay,
yes,
is this like a 20-year base or something?
it's holding
Was it
ever
Louis
since that
Yamada who
breakout.
said the bigger the base, the higher in space?
I don't know who said that, but
I
I
think
have heard that.
the La Padrina of technical analysis. I'm pretty sure it was her. And
All
while we're
right.
here, let's look at TTD, which the RS is weak because it's in a giant base while the market's been going up. What if this comes out? This is the absolute leader in digital advertising, and the earnings been kind of growing, and it's in a giant base. RS is weak, but okay, I've dragged this so far off track. Get me back on the road.
Okay. Okay. We're reining you back in. We did want to go to crypto, which we'll go to some of your charts, but I'm still in GBTC. It looks like it's strengthening today, up 2.6%. Yeah, I know it has a little bit of a higher fee. I get it, but I was getting into it a couple of months ago. And here's a look at iBid. I know this one also is widely followed and definitely has a lot of the volume coming into it, a lot of the transactions coming into iBid. But why look at crypto ETFs when we could look at actual charts of crypto, Jim? That because you are our crypto guy, and so you've been watching these setups and these breakouts. So how have you been handling the action lately?
Okay, so I started my crypto hedge fund like 6-7 years ago. So I'm not objective. I'm max long. I have been slightly adjusting out of some ether because I think there are some new protocols that are better, like Solana, yet still super high quality. But the news, the SEC, against almost everyone's thought process, they approved an ETF for ether. Now it's not trading yet. It might be 3-4 weeks or 6 months, but they've got the green light. So I do think there are protocols that are better. But until that ETF is launched and they take in 3 billion, 4 billion, I don't know. I mean, okay, in the last 15 days, Bitcoin has taken in into ETFs $2.4 billion. In this year, they've taken in 14 billion into ETFs. Now, Ether's not going to do, but these numbers are so big. This was the greatest ETF launch in history. Ether is not Bitcoin, and there's a problem with the staking. Okay, to have an ETF, it's going to be very difficult to stake. So you're going to lose the yield. It's going to be an imperfect product, but it's still going to be institutionally gobbled up. So I am in the chart. You have it up.
Yeah,
However,
ETHE. The
I
ticker.
really hate when a stock goes straight up for like a week and then goes dead tight. I mean, that upsets me. I mean, this looks great. Are you kidding
So
me?
upsetting.
It hurts my feelings. I mean, if you said, can I have a perfect chart? I'd like a high tide flag in a highly volatile asset.
Well, we just got it. Looks like.
So when you switch to TradingView, there was a beep a minute ago, and there's an alert on my TradingView window that went off.
Yeah, well, let's do we want to go to it? Do you want to
let's do
show us your Bitcoin right now? You've
Let's
got
do it.
oil up, but if you go to your
Well, let's just go down the row here, okay?
Okay, sure.
Okay, so in the
Okay.
lower left, there's an alert on Uniswap. So I'm just going to close that out. But crypto is in gear right here. Oil is breaking, meaning that and that's why the transportation index is coming down, which brings the 2-year yield down, which brings the 10-year yield down, which makes the dollar backing way off. Notice since the dollar's come down since mid-April, the market started to go up again. We talked about gold, but this is it. Okay, this is one of the most beautiful. I've been highlighting this in the Roppel Report for months, but it gets better. This is just
so let's let people know what this is. This is the Binance coin.
It's Binance, which is, by the way, everyone's like, oh, Coinbase. Binance is twice the market cap of Coinbase. The reason Coinbase is up is because Binance is breaking out as we speak. Now let's
So
just open this thing up. I'll just change to a weekly real quick. I mean, does that look like anything interesting to you?
yeah,
How about just a gargantuan cup and handle? And if I, I'm going to go, it's broken out. We have
yeah,
a pennant on a flagpole in a cup and handle, and it's out or emerging as we're speaking. But if you go to the daily, look at the volume. I mean, the
yep,
volume that's just been drying up. And if we go to Bitcoin, it's doing the same thing. You've got I'll go to the weekly. I tweeted all this out and I write about it every single week in the report because
yeah. You're keeping tabs.
you have to be careful with me because I am not objective. I mean, crypto has changed my life. But when I see a chart like this, it's just very difficult not to be encouraged by the possibilities.
Right.
All right, no, let's go.
It is volatile though, so we will temper the enthusiasm with that. But I mean, if you're just looking at the price action alone, definitely are getting those bullish signals. It doesn't mean we're not managing risk with every trade here, but fascinating stuff.
Look at how tight this ether has become. It has this explosive move up from 3,000 to 3,800, and it won't give anything back. And then if you look at these volume bars, it's amazing. And Binance actually, look at the volume bars in here and the tight action in these patterns. These are classic Bill O'Neill can slim. And now everybody don't throw tomatoes at me. But if you look at this is ICP, which everybody's like, it's a fraud, it's a scam. Well,
yeah, I don't even know what it is.
Well,
I've never even heard of it.
All you want, fraud and scam with your $4,000 in it. But look at the volume accumulation in here. I don't want to say it's unprecedented, but that is really rare stuff. And then it pulls back 50% because the altcoin market is just been terrible and volume dries up to nothing. The people who are not buying 1,000 coins are holding and building. So that we went through. Okay, I'm going to stop.
No, that's okay. You don't need to stop. Lily will take care of it. But so basically, long story short here, Jim, in terms of the crypto space is because I think a lot of people watching this, and maybe I'm going to insert myself into this too. Like I'm not a crypto head like you, but I want something easy that I can, access in my trading platform, right? So I think that's where the ETFs have had their appeal. So if you're looking at all of these other coins and these different charts here, do you think that strengthens the case for that broadening adoption? And so it's not like if you want to get involved, you have to buy this BNB Binance thing. There are other vehicles out there. Like what would you say is the easiest way if you wanted to trade crypto to get involved?
I think people have to get off zero. All right. I think there's going to be a time in the future where Morgan and Goldman and everybody's going to be, everybody should have 5%, 10% of their whole account in crypto related. I can only tell you what I'm doing. I keep almost all my money in the top 30 market cap coins. If I have a coin that falls out for more than a quarter, I'm going to reallocate into the top 30. That is such a crazy basic strategy, which is almost certainly guaranteed to keep you in the leaders for the next decade. But I have to just inject. I was in New York and I met up with a hedge fund manager running $1 billion in crypto. And I'm friends with him and I'm actually in his fund. And he pulls out his phone. He's like, Jim, look at these charts. Because he's a huge investor in these companies, they send him reports every day. Every chart was up and to the right, hockey stick up. And I'm talking about wallet addresses, coins locked, coins not moved in 2 years, sales at all these companies. Then he sent me an 85-page. I can't share it with you. Anyway, it's 85 charts of up and to the right. The crypto environment is absolutely exploding right under our feet. How do you do it? The average guy, you find an ETF that is suited to you based on its leverage and volatility. It's amazing what a 20% exposure in my equity fund, hedge fund, has done for my performance. Post-halvening, it's so hard for me to state these factual numbers of performance post-halvening. But if Bitcoin breaks out in the next day to month, no one's going to go, oh, how did it get to $130 on BTC? That would be a bunt. That would be an underperformance. I mean, the post-halvenings have all had dampening levels of performance. But it's not uncommon for post-halvening Bitcoin to go up 300, 400, 500% or 1,000. So yeah, I'm a little revved up. The charts are backing this up. It's not just me spewing David Koresh Kool-Aid to drink. These are corroborated by the charts. Now they could break down,
right?
But when I see one of the biggest institutional investors showing me his cell phone with all these charts going up to the right, and I know what's going on in the ecosystem, the digital asset ecosystem, I'm like, yeah, the charts are probably lagging. So anyway, if BTC comes out the top, you have classic O'Neill cup and handles in Gbtc. Actually, I think the Gbtc base is a loose version of the Nvidia base that just came out.
Oh, interesting. Yeah.
An opinion, you can poke a few holes in it. It's a looser version.
Yeah. I can see that. I could see that, Jim. Interesting. Except we're not ever going to have an earnings report for Gbtc. I guess that's the only difference. We could have news headlines, of course, that can fuel the move. But whether it's Gbtc or IBIT, this ETHE, not an actual ETF yet, but I imagine they'll be doing what they did with Gbtc and turn it into an ETF with that approval pending, it seems like, Jim.
Yes. And look, there are no locks. The SEC could turn the table and say, we're not going to do it. I mean, it's not done. It's not a done deal until it is a done deal. But the odds, the discount in this closed-end fund has gone to almost nothing. So the market is, it's not my opinion, that's a fact. The market says this is almost a done deal.
Okay, well, we'll keep an eye on that tight action. Okay, so we talked about earnings season. We talked about the recovery. We talked about Nvidia earnings as well. We talked a lot about crypto. You talked a little bit about oil and sort of that domino effect on the shorter term treasuries and the state of the consumer. Anything else from a macro perspective that we need to know about as we head into June here?
Stop me if I repeated myself, because I was just on a call with hedge fund people and I might have said this. I don't want to say it again here or twice here, but the Fed is not chasing. They're not chasing inflation. They're not chasing a recession. The definition of Fed perfection is on hold. They're not too hot. They're not too cold. You've got the technology sector rocking, which is totally deflationary, and the consumer's kind of backing off. Maybe, people aren't going to be so cavalier with spending, but and by the way, if the 3-month bill starts getting below Fed funds, that's going to start to signal a cut. Okay, just how deep does the discount get? But right now it's on hold. It's like it almost is a soft landing. I mean, I don't want to see consumers get hurt, but if the Fed starts changing policy, they're chasing. So that's a perfect scenario.
All right. Well, that's good. We'll check off the box there. And then in terms of healthcare, are you keeping an eye on, I mean, you mentioned Lilly, and again, I have to I'm required to disclose ownership. So I own that as well. But are you seeing anything of interest in healthcare or other rotations underneath the surface? Sounds like software as a service for now out. Is healthcare coming back into focus in your view?
I have been a 20, 30-year biotechnology bull. And when you understand the implications for AI on drug discovery and biotech, I'm going to overstate the case, but something like 30% of all new regimens or drugs are expected to be discovered by AI over the next 5-10 years. I love ISRG. I love the device. I mean, if you go back in history, Biomet, Stryker, Medtronic, it's Biomedicus. I mean, That sector is littered. Amgen.
Mm.
Okay, you want to go back in history of TML of TMLs? Amgen is the, Bill, I heard like Bill was digging in couch cushions to find nickels to put more money into Amgen. It's one of the greatest stocks in history of all time. So the biotechnology medical device area is amazing. And, I have to give a little bit of attention to Lilly. The implications for global health and longevity and quality of life is, this drug is a game changer. And now there's evidence that it helps people stop smoking, helps people stop biting their nails. This is research I'm reading, not an opinion. They're talking about not gene editing, but I'm no doctor. Manipulating your brain so you don't have an addiction to gamble. Like that, they're going down that road.
Because I guess if you're happier, you're relying less on vices.
Look,
again, also not a doctor, but
what if we save billions of dollars on jet fuel because the tonnage is not so high? What if people just become healthier in general, like Costco reports, less snack food purchases? Yeah. This is the long range implications for human longevity. And this is just a golden goose all over the place. All that money, the drug companies are not ripping you off. They're spending on R&D $100 billion on average to come up with the next cure for you. And if you don't like it, you don't have to give them their money if you think it's unfair.
Yeah.
It's a virtuous cycle of golden goose greatness.
Wow, that was a really jam-packed phrase there. But yeah, so an interesting story there. We'll keep an eye. There's others in the sector too. I'm not just trying to tout that. It of course comes to mind because I have been following it, but NVO in this space, Vertex and Regeneron coming out this week, so there are others there too. Because I want to leave some folks with some stocks that you're watching, watchlist names, close to being actionable or setting up this week. Jim,
guess
what's
what?
on your short list?
I'm ready.
Let's do it.
Please pull up First Solar.
I knew you were going to go there because I read in the Roppel Report your take on this one.
Okay, let's just assume you did not know anything about the fundamentals, which, by the way, the administration is now starting to trade war with China on solar panels. And even the Chinese government is listening to the solar panel manufacturers in China saying we cannot dump anymore. It's crushing our own profits here. If the odds are right and Trump is reelected, he's a protectionist. Okay, he's not the free market dude everybody thinks he is. He's a protectionist, and he highlighted this industry as one. So I went to the fundamentals. Let's just skip that. The violence of this breakout, that looks like the Ether ETF right now. Okay, now, but it smacks of the base of GDDY, GoDaddy. Look at the weekly on GoDaddy and then draw a downtrend line and then look at that breakout. Look at that. That breakout, to me, resembles the First Solar initial. This has been an eruption. And I think the up to down volume on First Solar is, what is it?
Yeah, 2.
2.0. That's like driving a Yugo at 150 miles an hour. An up to down, that means trust me, you don't. One of my favorites, 2.0 or higher is exceptional. And the power of this breakout, the fundamentals are there. And this is so unique to me. I'm willing, and I don't like buying short bases. You're kind of taking a much, much higher risk. But, let's go back to GoDaddy. If you bought that 2 weeks after its first breakout, when you have power like this is unique. I like it. I think APP, and again, I am so late to the party on this thing because I don't like overhead, but it is crushed the overhead. And how many weeks tight does that look like right now?
It's working on its 4th.
4. Those are good. It's a 99 comp name under accumulation. That pattern is, look, people lie, patterns don't. That looks really, really good.
And what a lot of these have in common, Jim, that weekly volume, the volume spikes on the weekly, which I know is something that you look for. So there it is with APP for solar here as well. So we definitely are seeing that.
Not hide. And once they start to build, like a big institution, they're running 100 billion. They're literally on the bid every day for 50,000, every day for 100,000. And I mean, for a month. So that's how you get a chart like GoDaddy, which, by the way, GoDaddy's earnings were not foreshadowing greatness. Their earnings were like single-digit estimates forward looking. The chart told the story. The analysts are almost always behind the curve. They don't want to overestimate and miss and lose their job. They're not interested in helping you make money. They're interested in keeping their job. So they're all, that's why beat and raise comes in. The definition of a true market leader is sitting through 3, 4, 5 beat and raise quarters. The earnings come out. The market's got to adjust the price to the new news of the beat, and up it goes. It's beat and raise. Almost every TML has beat and raise.
Yeah. So this one's up and out of there now. You know, too bad I wasn't buying it right when it was bouncing off of the 50-day line on that last earnings report. But First Solar, FSLR, we had, and this wasn't on earnings. This was actually after earnings, although it did have a nice move on earnings. That's when Leaderboard added it. So now here, what you're just looking for it to come out of this short digestion, Jim, and then you would be taking a position. How would you be sizing it?
Okay. It depends on who you are. If you're a cowboy, if you were Jim Roppel 30 years ago, I'd put 25% or 30, 40, 50% of my whole account in it. But this is Jim Roppel, 60 years old, who has a responsibility to a lot of partners. You know, and again, the stubbier, the shorter the base, the higher the risk. The longer the base, the more stability. But the power, if it's a basketball underwater, those institutions that ran it like that, they're not going to wait. Or they might be impatient and stop sitting on the bid. They might start taking out the offers and running the thing. So yeah, I don't believe in a bull market you can start with anything. For me, anything less than 10% is a waste of time. If a 10% stock doubles, how often do you get a double? Right. It's a 10% equity change. If you have less, if you put 2% in and it doubles, which is really great, it's rare, you only move the needle by 2%.
Exactly. Yeah.
In a bear market, I'm going to test with 100 lots. Okay. But when they get traction, if I get 2, 3, 4 with traction, I'm going to build, coupled with a follow through day. Then I'm going to really go after. So anyway, I'm going to start with at least 10%, acknowledging the much higher risk cowboy, stubby little base. But you have to weigh what could the upside be if there's AI requires what? Power, and these guys generate power. There's another angle in there. I think this looks great. We've killed this one.
Great. Yeah. Sounds good. So you gave us First Solar, you gave us APP. Anything else on the short list that you're watching?
Let's get out of America. Let's diversify some more and look at PDD, Pinduoduo, which has Temu, which is one of the most heavily downloaded apps on the App Store. They have a new way of retailing. This is a 99 comp earnings juggernaut. It is the quality, like China had a follow through date 2-3 months ago. We can look at FXI or KWeb or whatever. Yeah. The market is in such a horrific multi-year bear. Nothing was anywhere near the highs. Now, the earnings at PDD are probably some of the best in all of China with liquidity. I think we're looking at $136 billion market cap. Am I anywhere near close?
We've got 213.
213. Okay, so this thing's liquid. It's not some flea. It just broke out of a very nice base. It is it's 99 comp. It's on a little bit of a pullback here. The SSE has pulled back in China, but this is my quality idea. You can look at TME for China, but the earnings, see, this is like GoDaddy. The earnings look terrible and the earnings are not projected to be good, but the chart is telling you that it's discounting a future that the analysts don't see yet. But I like everything on the table today. I'll see the RS is higher on TME by a little, but I'll go with the stability.
Yeah.
So I like that. CAVA is, I mean, I take pictures of my hedge fund buddies. We all go there and have lunch, and this thing's extended. It's wildly extended, but look at the group strength. Group strength is 9
21.
21
out of 197. That is very strong.
You know, this is super extended, but the CEO the chairman of the board was founder of Alban Pan and CEO of Panera. This gentleman understands this situation. The management couldn't be any better. The blue zone as a trend of losing weight and being healthier is in play here. The earnings growth, the sales growth, the store count growth. I think they're trying to go for 1,000 stores by the end of the decade. That's over 15% store growth. Earnings and sales are there. The fundamentals are there. I understand this. You just have to wait. But I was in the Starbucks IPO, and I gave instead of my girlfriend, who I was dating at the time, I wasn't sure about her. I gave all those shares. She became my wife. I gave them to my best account, who held them, and he holds them to this day. I believe he has in excess of like 60,000 shares, and I was with him the whole way. Starbucks, one of the greatest retail stocks of my life, missed earnings like once every other year and had a violently bad break along the way. CAVA is invariably going to stumble occasionally, but if they have the assembly line method like Chipotle, and just let's look at what Chipotle's done since McDonald's spun it off.
Right.
Which, by the way, this came out of one of the most perfect cup and handles I've ever seen. I remember sitting in a restaurant with Keir McDonough, and we're pointing, and we almost couldn't believe how beautiful the base was.
The most recent one?
No, this was 15 years ago.
Okay. I was about to say, yeah.
No.
Yeah.
Mediterranean is not going to have the broad appeal of Mexican. Okay. Salsa outsells ketchup in America. Okay. So it's not going to be, but we don't have to get that big. What if it just does half as well over 5 years? And be ready for some bad breaks. But once you have cushion, if you have cushion, you can deal. So I love CAVA. It's just not opportune today.
Right. I mean, and that earnings, such a tough test intraday, but a very, very bullish, successful test, right?
Well, it was a total expectation breaker. It gapped down, and I wanted to buy it so bad. I wanted to add because I thought I knew the fundamentals, but I forced myself to wait. And when it did an upside reversal, man, I hammered it. And I think there's going to be many more opportunities to buy in this name, but it's not going to be as liquid as a First Solar. This is still it's a high-end small cap or a very low-end mid cap market capitalization.
Okay. Great analysis there, Jim. Any other final thoughts before we wrap? How about a bit more of an outlook, your posture, your thoughts on June action?
I will say the trends are two trends: short-term sideways, long-term bull. I believe we're going to remain in it. And the market could get quiet. The big dog's going to go out to Long Island and kick it. If the Fed starts to signal more, if the economy deteriorates, if the 3-month bill starts getting below Fed funds, the market's going to smell rate cut. So I would really focus on that. The main canary in the coal mine is Nvidia. And we're in a brand new bull market. And it didn't start when the market bottomed. Okay. It started last November. When the NASDAQ bottomed, nobody could make money. Slim got in gear in last November's follow-through day. We are super early. And what I think is widely misunderstood is the magnitude of the growth bear market that we just ended. I put this in the Roppel Report, so I call it like one of my favorite charts. This is not a debatable fact. It is a fact. It's not debatable. Net new lows in the bear market we just ended were worse than the 0809 subprime disaster and the dot-com bubble bursting. For growth was hammered worse. It was the worst bear market in my lifetime based on net new lows in growth. It was unbelievable. And we just ended that. You couple that with the AI revolution and the golden goose and robotics and genetics, and we've never seen an American renaissance of innovation like this ever, especially just ending a bear market. And things are pretty in gear here. It's a little thin. Getting thinner is going to make me nervous. But look, a market the three broad markets are all 3% or 1% off the all-time high. Get your hands and grab the bench.
Yeah. And manage risk, right? I mean, you can be wildly bullish, but that doesn't mean that you're not going to manage risk. We just have to emphasize that.
Look, the guardrail is what's kept me in the business for 30 years. When things get below the guardrail of the 50-day moving average, I start trimming. I don't care how wildly bullish I am. Yeah. The market's disagreeing. Guardrails, when you're racing a Ferrari through Colorado mountains, keeps you from going in the cliff. You can never, it's a zero defect policy.
Yeah. So trimming and hedging, right? And buying right. And even
buying extended.
Yeah, even when you're buying aggressive, like the first solar, for example. I mean, acknowledging that that's an aggressive entry, still having a stop.
I'm a hypocrite. Okay. I was like, don't buy extended. But they're like, CAVA has no digestion.
Yeah.
First solar has 5, 6, 7 days. Mm-hmm. We could end up, if we get a summer snooze here, and that would go 3 weeks, 4, you start getting over. I don't like to start brand new. 2 weeks tight is an add spot. It's risky to start a whole new position. So you better have reason to believe your asymmetry is enormous to take the added risk of buying a short base. So I'm a hypocrite. I'm saying don't buy extended, but then I bring up for solar. I'm explaining the variables here. It's an art.
It is.
If it was science, a code would have been written, right, and we'd all be kicking it. But
yeah, not yet. Hasn't happened yet. I love the art to it. And I love your perspective as always, Jim. So any final thoughts here as we wrap up?
The golden goose of capitalism is going to keep birthing Starbucks, Blackberries, Apples, Teslas, Nvidias. As long as it's not suffocated by socialism, it's all in the Roppel Report every week. I answer all your questions on Wednesday. Allie's double kick ass. Thanks for having me.
Thanks for joining us, Jim, as always. And Lily. And we'll be back for next month's monthly market report at the beginning of July. So we'll see you then, everyone. Thank you so much for joining us, and we'll see you back here next month.